Happy New Year, welcome to our interview. I'm Ivy. Looking back at the past year, it was undoubted an extremely hard year for everyone. Now 2020 may be coming to an end, but the challenges we face this year still continue, like COVID-19 pandemic, intensifying political division and economic fallout. So in the time of those continued uncertainty and market fluctuation, how to ensure our investment is well protected and what are the proper investment strategies in 2021? I will bring those questions to Adrian Ting, the head of private market of Wingate. Adrian, welcome and very nice to have you here today.
Thank you, Ivy. Thank you for inviting me to your studio, and Happy New Year to you all.
Firstly, congratulations on your great success of the 5th Annual Investment Forum. And I also heard about you invited Peter Costello, the longest serving federal treasurer, right? And he delivered a very fantastic keynote speech. But you know, as for the Chinese audience, they may not quite familiar with your company, Wingate. So could you please have a brief introduction of it?
Of Wingate, thank you very much. So Wingate was established over 17 years ago. We are a Melbourne-based investment house with a long track record or success in investing in property, investing in businesses where we grow the business, but we are also very prominent lenders to property and to businesses. So our founders founded Wingate with the view of investing their own money and offering these same opportunities to their family and friends and to our network of investing together with Wingate. So today, to give you a sense of our Wingate group, our group consists of over 170 people
or employees,
across offices in Melbourne and Sydney. And today we manage over $3.2 billion worth of assets.
Wow, cool. Actually, I think Wingate is definitely the industrial leader. And we have to admit that one of the keywords of 2020 must be uncertainty, because you know, those kind of unsureness maybe still continue in the post-COVID-19 period in 2021. So how does Wingate deal with those kind of uncertainty?
Sure. So Wingate culturally is a very conservative organization, and a lot of it is because of the founders themselves and how they instilled the culture within the firm, but primarily also every single investment that Wingate offers to its investors, Wingate founders and staff invest in their own money into every single investment. So it makes us a lot more cautious. We think that 2021, we haven't seen the end of the uncertainty. We just don't know what will happen to the economy, what could happen with all this COVID obviously impacting the economy. So how we deal with uncertainty is that we think that it is probably a bit more riskier now to invest in property or to invest in businesses, okay? And so where we see the best opportunity to preserve our capital but also make good returns is to invest in loans by making secured loans for our investments.
Yeah, I think Wingate is really well prepared. And you know, our Chinese investors may be more familiar with, just you mentioned, the property investment and the shares, but you also mentioned that Wingate is well known in the secured private debt field. So how does this differ from other asset classes in terms of risk and return?
Sure. So most investors typically have shares. They invest in property and they have cash. Shares and property provides high risk, but potentially can earn a lot more return. And most of that return comes from capital growth. So with shares and property, if the price goes up, you make good capital growth. But as you can probably see during the pandemic, in times of uncertainty, that if prices fall, you could lose capital as well. And not only that, in times of uncertainty and weak economy, you could possibly see dividends being cut as well. So if you're relying on shares to pay dividends, dividends could be cut. And if you're relying on investment property to pay rent, you know, you could have your tenants being unable to pay you the same rent, and you can have rental yield drop as well. So with secure private debt, it's an alternative way of investing. It's much more conservative in terms of preserving capital, but it gives you much more certainty of income by interest income. Essentially, secure private debt involves you lending towards property or towards businesses, but you have the security of the property or the business. So in the event that the borrower defaults, you have the right to take over and sell to recoup your capital back. Your loan is contractually set so that your borrowers have to pay you the interest. And so there's a lot more certain outcome with investing in secure private debt. And lastly, our loans are just between us and the borrower. It is not listed on a stock exchange, it's not listed on any market. So even with a pandemic that we saw last year, nervousness of the market doesn't really affect the value of our direct loan that we provide to the borrower.
And you've also mentioned that you've already taken the risk factors into consideration when setting up the funds. But like the market fluctuation and the risk can come from lots of aspects. So how does Wingate seek to ensure our investors' capital are well protected and safe?
That's a good question. So as I mentioned earlier, Wingate is a very conservative firm.
Sure.
And we've, over 17 years, successfully ensured that we've preserved our investors' capital, and we want to put in place the policies and risk procedures to ensure that we maintain good investment standards. As an example, there is no important investment decision that is made by one person. All our important decisions are made by committees, which include independent members that sit on the committee, as an example. With regards to lending, we have over 40 people that are involved in the lending side of our business. Of that 40, 5 are permanent lawyers that ensure that our investment loans or loans are watertight or secure. Of that 40, we also have about 25 people that focus on property loans and about 12 that focus on corporate loans. Okay, and so with every single loan investment opportunity that we look at things such as the quality of the borrower, their track record, and the ability to repay our loan, the quality of the asset, where is it situated, what security do I have over assets, and maybe what security do we have over other assets that protect our capital. Often we might look at other ways of protecting our interests by maybe getting a personal guarantee or maybe looking at pre-sales. The value of the loan that we provide versus the value of the total property. These are some of the things that we look at the investment, at the loan level. Now, if at that stage our property team, for example, is comfortable with the loan and to proceed, the proposal is then submitted to the credit committee. We have a credit committee that is made up of 4 senior Wingate executives and 4 independent executives. That's on the lending side. Now, bear in mind, there's an extra level of security here for our own capital as well as our investors' capital via the fund. So in the fund, we have an investment committee, which is also made of 4 internal executives, and I think at this stage it's 3 external executives, and they will determine and need to agree whether the fund invests in each loan that Wingate makes. So as you can see, no single decision is made by one person, and our funds are all audited by Ernst & Young as well as our company.
Yeah, I think Wingate is quite reliable, I think. And as for the investors, the cash flow is quite crucial. So what can Wingate offer in terms of the high income cash flow solutions for the investors?
So as I mentioned earlier, we think one of the more compelling opportunities in an environment of uncertainty is to invest in secure private debt. And rather than just invest in a loan where your investment is to the successful repayment of one loan, what Wingate offers via our flagship fund, the Wingate Investment Partners Trust, is via a fund that contains 50 to 60 loans or 60 plus loans. And so our fund has been successfully running for the last 9 years. Since inception, our return has been close to 10% by interest income that is paid out quarterly, every quarter. And as another reference point, in COVID last year, for 2020, our fund delivered close to 8% paid quarterly.
That's also a lot, actually.
Yes, and just to give you a sense of how popular this fund has been, our funds under management for this fund is now $1.1 billion
Wow.
over, and that represents about 1,800 private investors or high net worth investors. Their family offices, foundations even invest with us.
Wow, the fund performance is really impressive. I think almost close to 10%, right? Yeah.
Well, with COVID, we again, being a conservative firm, we are looking to be a lot more conservative with our loans. So we're looking for even stronger loans with slightly lower returns. We're talking about 8% to 10%, as opposed to historically during the good years we were delivering 10% plus. But now our fund is targeting high single-digit interest because it reflects a stronger loan, lower LVR. Mainly first ranking. Over 90% of our fund is first ranking loans. So we are just making sure that we invest in the strong loans that to ensure that our capital is returned to us as well.
Yeah, I think the product performance is really impressive, especially during the COVID-19 period. And okay, we still have our last question, and it's an easy one. Do you have any words for our audience so that they can be prepared with 2021?
So I think to summarize everything, we believe that 2021 there's still uncertainty in the economy. We still think that there is still a lot of implicit risk with investing in shares and property. Now, you can make greater returns, but there comes with a greater risk, and especially if the economy continues to be uncertain and volatile, you could see your capital at risk. And so what I would encourage to the audience is you might want to not put all your eggs in one basket and invest in shares or property. We would suggest is to consider diversifying a portion of your portfolio to something that's a bit more stable from preserving your capital, but to achieve a high income stream. That is something that I think audiences should consider or look further into.
Adrian, thank you. Thank you for your time with our offer interview today.
Yes,
actually, I really learned a lot from your conversation, and I bet our audience can also benefit a lot. Okay, well, if you have further questions about Wingate, you can scan the QR code and talk to one of the Wingate investment experts. And for more information about our program, you're welcome to visit our Chinese WeChat official account of InAU and subscribe our YouTube channel, 澳财访谈. Thank you for watching. We will see you next time. Bye bye.
Thank you, Harvey.
Thank you.